Hey there, it's Mike Wise, CMG Home Loans with your weekly mortgage update. And it's been a quiet couple of weeks with data because of the government shutdown. So we have not seen retail sales. We may see the CPI next week because they've hired some people back to the government to get that information. But a lot of information that we have not gotten, the data that we have not gotten, has kept the markets pretty quiet. But we're starting to see the 10-year Treasury come down. Why? Because we have Fed governors, Chairman Powell talking, and they're all showing that the Fed funds rate is going to go down, interest rates are going to go down. So let's take a look and see what some of the data looks like here. So I've highlighted here something I'll tell you in just a second, but basically, Jerome Powell this week, he's talked about quantitative tightening. Quantitative tightening was basically pulling back the purse strings of the Federal Reserve, not buying assets and not reinvesting any loans or treasuries that were paying off. And that is quantitative tightening. That's basically keeping interest rates higher. They're not reinvesting into the market, or they hadn't been reinvesting into the market. And so that would actually put interest rates down lower. So the quantitative tightening is going to stop. It's going to unwind. And that is basically has a downward pressure on interest rates when that is the case. So a lot of things going on here, but basically Jerome Powell and other Fed members have basically been saying that they're going to drop the interest rates. And I'll show you that in just a little bit as well. Real estate, as far as real estate is concerned, let's take a look at this right here. Basically, on a quarterly basis, this is the number of homes sold by quarter, right? So January through March, we're coming up on that. It's going to be a slow quarter, but basically it starts to slow down in the fourth quarter, slows down further in the first quarter, and then it starts to gain momentum in the second quarter and stays pretty stable into the third quarter. So we're going into the low times of kind of home sales, but in my opinion, again, this is a good time to buy. Why? Because there's less competition out there. It's good to get out there, put an offer on a place because there's not as much competition, especially in this time of the year. So there's a lot of seasonality. Something came out, an article this week with the Gen Zs. Everybody's worried about the Gen Zs. They can't afford a house and they're all worried about them. Well, 67% of the Gen Z, they see home ownership as an important lifetime goal. So basically, they do want it, but and that it's an opportunity to generate wealth. But at the same time, they think that it's expensive right now. They are waiting. They're working on their jobs first. Then they're going to be working on their families, but it's all about their home ownership goal is 67%. Don't worry about those Gen Zers; they will get a house, right? Builder confidence was boosted. So builder confidence, that's a good sign. That means that we're getting back on track. They're going to start building houses. Interest rates are going to go down. So this is a big move up here. Basically, next 6 months where the conditions for them are looking pretty good. Rents continue to kind of basically modest declines. So those are going down just a little bit, even though they've gone up a lot over the last period of time. Let's talk about the FOMC meeting. So let's go to, let me go to this page here. So this is the October meeting, right? So this is going down to 375. Currently, we're at 4%, but this is kind of what we look at, right? So this is 1 month ago right here. So this is, let's go 1 month. And then this is 1 week here. And then this is 1 day. And then this is current, right? So basically, you can see that the trend is that there's basically a 90, where is that? Yeah, it's like 100% option or 100% proof that they are going to lower the Fed funds rate in October, and then the same thing in December down to 350 here. So it's going up. It's 95% probability that they're going to lower the Fed funds rate. While that does not directly impact mortgage rates, it does impact credit cards, auto loans, home equity lines of credit. All of those things are impacted, but mortgage rates, they are impacted by the yield on the 10-year Treasury. And so we can see this. This is mortgage-backed, U.S. mortgage-backed security market, and so that this morning is not doing as well, but at the end of the day, that's been getting better. In fact, let's look at that chart. So when you look at the chart, you can see as price goes up here, that means mortgage rates will go down. So it's an inverse relationship with the mortgage rates, with the treasuries. But the yield on the 10-year Treasury, this is where you should be looking here. And so you can look, this is the past 6 months of data, and you can see that the trend here is that the yield is going down as of late, right? So that is good news. We have not seen, in fact, let's go out a year. So the yield is just right at 4% this morning. So this is back in March of last year that we were down there. And so, in fact, we saw a little bit a couple weeks ago, about a month ago in September, that the interest rates did, or the yield did drop there. So we're right at a level here that it could go down, you know, it could go down to 390. If it goes down to 390, that's a level that we haven't seen in a year. And then below that, if it goes, this is kind of the support level 2 here at 380. So those would be some good numbers to get through. If you go 380 and you said that the spread with mortgage rates are about 2.2, that puts interest rates at 5%. That's not right. So we're going to be at 6%. That puts them at 6%, right? So that's pretty good. We'll get down to 6% on some of the mortgage rates if the yield gets down there to the 580 level, right? And so this is where mortgage rates are today. 30-year fixed rate, good credit, low debt, or low loan to value. We're right around 620. Jumbo rates, same thing, right around 620. FHA down below 6% on the FHA loans. Now, I want to talk to you about the FHA loans in just a hot second here. Let's go one more thing, and we're going to talk about the slowdown, basically leaving the Fed in the dark, right? So a lot of the data, we've seen the mortgage rates come down, we've seen the yield come down, and that's all based on Fed comments. It's based on public data, not government issued data at this point in time. So they can't really make a good decision going into some of the next meetings for the Fed at the end of October without that data. So we'll see what happens here, but basically the shutdown is leaving the Fed in the dark on the data. So at the end of the day, what I wanted to talk to you about was this. We've got a loan program, Purchase Money Transactions, where we can give you 6 months of no interest payments. 6 months of no interest payments. If you want to find out more about 6 months of no interest payments, give me a call. I'd love to go over it with you, show you how it works. It is a great program. FHA, VA loans are where we are using that product. So anyways, this is Mike Wise. I will be around this weekend. If you have any questions, please feel free to reach out to me. Would love to talk to you and help you with anything that you need. Have a great weekend, and we will see you next week.